my presentation is why silver, why now? And anyone that's paying attention to the metals market is probably well aware that both silver and gold are on fire right now. And since silver is my specialty, I decided to focus this presentation for the Metals Investors Forum on silver. So as far as I'm concerned, this is the final leg in a precious metals bull market that started for gold in the year 2000 and went to silver September 2003. So gold started this market off, silver followed, and we've already had a couple big legs up, 2 legs down, and now we're starting the third leg. And what's interesting about this, and me claiming it will set a record, and that remains to be determined, is that all markets accelerate at the final end of their market, which means you see most of the price appreciation during the final phase. And I'm convinced that we are in the final phase. Right now, we often hear about the gold Dow ratio. I just wanted to point out the silver Dow ratio. If you measure it in terms of silver ounces, it did spike in 1980 and again in 2016, which is not on this chart, by the way. But what it shows is metals very undervalued relative to stocks. If we look at silver in today's dollars, this is a log chart, and this is from shadowstats.com. I sourced it at the bottom right, John Williams' site if you're not familiar with it. But the all-time intraday price of $50 an ounce in 1980, using 1980 CPI metrics, not the ones that we use now. They were changed after 1980. If you use those metrics and calculated inflation as we did, you would actually need almost a $600 silver price to be equivalent to $50 in 1980. If you use the government's claimed inflation rate, you would have about a triple, which would mean about $150 silver. So when I have outlined in 2003, when I was pretty well established on the internet with the silver presence, and I said $100 silver when silver was at $5, that sounded extreme, but relative to inflation-adjusted prices, it really wasn't. So this is a little side-by-side of the silver market in the 1970 to 1980 bull run and the current market through 2019. They are obviously not identical, but I think, again, and it bears repeating, which you'll hear it a few more times during this presentation, is that the main acceleration takes place in a very short period of time. If you look at the top chart, the bull market that I'm old enough to have participated in, you'll see that from the start of the chart in 1972, I'm sorry, I'm talking silver here. If I said gold, forgive me. So if you're looking at 1972, the low was about $1.31, which was the monetary price of silver in 1964. So we're there in the early 70s, still hanging around the monetary price, got all the way up to about 5-ish or so in 1974, and basically flatlined for a number of years, which is very typical of silver. I've coined a phrase, silver will scare you out or wear you out. You get these extremely violent moves up and down, and then you get these wear you out moves where it just doesn't really do a lot for a long period of time. But anyone that knows the commodities markets knows that any long base is like being a triathlete. They call all the work that you do, running, swimming, and biking, building your base. And the bigger your base and the better your base is built, the better you perform in the race. And so that's kind of an analogy to the silver market. So once you got to 1979, I'm not sure you can see my cursor, but we got this big acceleration move up in the silver market. So you could have ignored this whole 1972 to 1979 range and just got in at the last year and done better than anybody that had invested previous to you. So the 2000 market, we've been flat to down. Now we're coming up to like 26 or 29, I think, as we're doing this presentation. And I think we have more, not that we won't see a pullback, we will. So to reemphasize it, what if 90% of the move comes in the last 10% of the time? The total silver bull market was roughly, from the way I look at it, 1965 to 1980. And it went from, again, the monetary price to $50 an ounce intraday, January 19th, 1980. If you look at that, you can do a very simple arithmetic problem. The total move was about $48, and 42 of those dollars came in the last 13 months of a 180-month bull market. So obviously 42 divided by 48, we're doing basic math here, is 87.5%. And 13 months, and I can't spell, obviously. I am better at math than spelling. I'm sorry. I guess we get a laugh out of that. But 13 months, it's supposed to say, divided by 180 is 7%. So actually what happened is we got an 87% move came in the last 7% of the time. Now, I want to stop here and just emphasize, this does not mean that this run that we've begun now is going to be a year long or many months, or that it's going to do the same type of price appreciation. But the main idea is that the last leg does the most price appreciation most of the time, and the duration is rather short relative to the total bull market sequence. So I think this is very helpful to any investor that is in these markets, because all markets go up and down. They are undervalued, fair valued, and overvalued. We're far from overvalued in either gold or silver. I showed you what the equivalent silver price would be based on the metrics of the CPI if it were not changed after 1980. And you can accept that or not. I can prove it statistically, but it's a big number, obviously. Where we're going from here, I think we're going higher. Again, a bull market's main function is to shake off as many investors as possible. So when there's going your direction and you're long, you'll see these great moves up. You'll be very happy. You'll be telling your friends. You'll be counting your paper dollars on your computer or on your phone with your calculator. And then all of a sudden you get 3 down moves that just take the wind out of your sails, and you might be disgusted because you just got in and all of a sudden you're back to even or whatever. So be prepared for that mentally, but you want to ride the bull and hang on. And the best way to do that in most cases is to find the best investments, the best companies, and hold them throughout the whole time and get out near the top, not the tippy top. So let me press on with the presentation. In 1979, the silver started at $6 an ounce and it peaked at 50. That was an 800% gain in about 1 year. So the answer to the question, everybody that's out there and anyone in the MIF is probably already invested, but for the public that sees this later on, it's too late. You know, silver's at 30, I'm not going to buy it. No, that's not necessarily true. What I think will happen is silver will probably double, redouble, and double again. I think there's a lot of move to the upside to make up for all of the printing press money that has been foisted upon the population of the planet. And there's really not many exits to go to. There's the precious metals, there's other hard assets, there's the energy sector, and of course, what I like to specialize in, the mining sector. And I just want to pause there and talk about mining just for a moment. I've always emphasized physical purchase of metal first, and I won't change. I want to be consistent. But think about it. Would you rather buy a golden egg from a goose, or would you rather buy the goose that lays a golden egg and lays a golden egg and lays a golden egg? I like to have both. I like to have my safety net, which is physical, but I love the mining sector if and only if you diversify properly. And again, that's what I do for the members. So is it possible the next leg up will be led by cryptocurrencies that are metal backed? And the answer is I don't know, but I do know what's taking place in the big picture, which is something I start with before I do any analytical work in the precious metals. And what we find is that we are being pushed by the power elite, the banking sector, into a cashless system that's digitally quantified, which is almost exactly where we are currently with your current bank account, wherever you are in the world. And it's funded basically through plastic, which is a mechanism with a chip that goes into a computer, and it digitizes the transaction and basically takes digits out of your savings or checking or your credit line. That will be perfected, I think, into the blockchain, and will be done with official cryptocurrencies that I see in our near future. The crypto world is something that we've been addressing in Morgan Report for quite some time on a more or less big picture basis, although I am partial to some of the precious metals backed assets because I'm a big believer in real money. But regardless of what I think about it, it's for you to make up your own mind. But I want you to understand that these can be married successfully. I am associated with this project called Load, and it is a cryptographic silver platform that does settle in physical if you choose to do so. It is a new paradigm. It's something that I am watching as it progresses. It's been a long haul. We just got an influx of 10 million euros about a month ago. So we're at a whole new platform as far as how robust we are and what kind of finance we have to basically get the word out. And it's something that more and more people will probably become familiar with, not just this particular one, but those across the board. There are many that are gold and silver backed, and there will be more that come available. So I have come pretty much to the end. This is a little bit of a self-serving presentation here at the end, just that I do a lot for the public. I do write a premium letter that is an electronic letter. It's usually in the 15, 16 page. There is a model portfolio that features top tier, mid tier, and speculative situations throughout the resource sector. I was the first in the rare earth elements. I was the first on cobalt. I was one of the first in some of the other sectors that were popular later on. I was first getting into the rare earth elements. I was a little early getting out. I got out about a year too early, and I took some flack about that at one of the conferences. But looking back, it really wasn't so stupid to get out that early, because once it started to fall, a lot of these really darlings of the sector, like Molycorp, for example, if you take a look at that chart, you can see how high they can go and how quickly you can lose a fortune in some of these companies. So you got to be very cognizant of not getting too greedy and selling into strength. It's something I've emphasized. And the reason is I learned it the hard way, being on the commodity side of things for a number of years and trading for a living for a while. I learned the hard way again, not to get too greedy. Sell into whatever you own long or you've bought and plan to sell at a higher price. Sell it when there's a lot of buyers. Don't try to sell it when there's very few buyers. And that's, again, selling into strength. So my main thesis is to build and preserve your wealth. I think it's more important now than ever to preserve what you have. We're entering a mixed bag here where we have deflationary forces, lots of unemployment, lots of people receiving benefits from the government because they are unemployed. And on the other hand, we have this massive increase in the amount of funding money that's being printed by central banks around the world. So you have inflationary pressures in basically things that you need, which would be food, for an example. And of course, we all need the mining sector. You either build wealth from in the ground or on top of the ground. It either comes from something you grow or something you mine. That's the basic essence of it. I have 3 services, and I just mentioned the main one, and that's the one that's a best fit for almost everyone. Our success is your success. Last year, January to January, the top tier portfolio, 6 of 6, every one of them were up. They varied, but if you had a balanced portfolio of those 6, and you must diversify in the mining sector, you just don't want to pick that one penny stock that has the best story you ever heard. That's a good way to go broke. So across the board, if you average those, we're up 63% for the year. And I think that 2020 January to 2021 January will probably equal or do better than that in the top tier, not talking some of these long shot speculative investments or the mid-tier sector. That's a quick look at the first page. That's what it looks like. Usually have a quote, and then I build the editorial based on the quote, and then I move into the metals and the miners and the company updates. The book is available again. I wrote this several years ago, put it on Amazon, and Amazon, for me, I don't want to say generally speaking, for me personally, was a bit cumbersome. So I've just reordered the book, and I actually physically have them here with me in the office. So this URL is now available again, and those prices are wrong. I did change the pricing, but this is the old website. But the URL is correct, thesilvermanifesto.com. If you're interested in buying the hard copy of the book, you can go to that. Covers a lot about the silver market, and it has a couple chapters in there that this audience in particular may be interested in. One is how we analyze a mining company. It's a rather best written and edited version of what we do, but even a sophisticated investor might need to read it 2, maybe 3 times to kind of study it to understand exactly how we do it, but we do lay it out. So if you're a do-it-yourselfer or so inclined, you could buy the book just for that one reason. I'm not trying to make a hard sell here. I'm just trying to give you a feature of it. I do a chapter on the manipulation that, in my view, proves beyond a shadow of a doubt the silver market has been manipulated for a very, very long time. And I do it mathematically in a manner that almost anybody could understand. And I think if I was ever sworn in as an expert witness for the what's been the shenanigans that have been going on in the in this market, I think that the book would be self-evident as far as what's been going on the pricing of this precious metal. So that's available. The last book was a combined effort with me and David Smith, who's been with me for quite some time. Second Chance, but the subtitle is more important: How to Make and Keep Big Money from the Coming Gold and Silver Shockwave, which again, I think we've now entered. And this is probably the best $20 you'll ever spend. The whole book basically teaches you how to not do a round trip or give back too much money. There are investors, not just in the metal sector, that buy a stock at 5, watch it go to 50, and ride it all the way back to 5. That's called a round trip. Don't do that. Let me repeat, don't do that. So I'm not trying to be funny. I mean, it's sad when people don't take a profit. They get too greedy or they, whatever. This book will teach you several techniques. And it'll also show you, if you exit early, let's say the silver market gets to 100, which I claim that it will. We'll find out. It could be wrong, but I think I'll be correct. In fact, I think it could go higher. We'll find out. Regardless, let's say you decide to sell out at 80, you're 80% of the way there. And all of a sudden you see it's really moving, but you got your money. You don't really want to risk much. We have what's called a sacrifice fly technique that's in this book, that you can take a little bit of those big winnings that you have and use that technique to get back in the market on a leverage, but safely leverage situation, and go ahead and get back in and do the sacrifice fly and maybe pick up some pretty substantial capital appreciation doing that technique. So there's lots in that book. I have to reread it myself, but I'm pretty happy with what David and I came up with. We do have a physical presence on Twitter more than anywhere else. Well, YouTube both. If you go to themorganreport.com, you can get on our free newsletter. If you're interested in really diving into the sector with my take on it, you should consider getting the premium service, which is a paid service. But the YouTube channel has most of the presentations that I do and the interviews I do throughout the week. Twitter is run pretty much by me. There's a couple gals that help me with it, and David Smith has access to it, but almost any posting there is done by yours truly. And I'm going to conclude there.